UNL Extension economist Kate Brooks is our marketing analyst this week. We talked with Kate Friday morning after the latest USDA Livestock Slaughter report.
Not a lot of surprises. If we look at April this year over last year, we were up some on the cattle side. We saw some increases in steers and heifers. Some of that increase in heifers could be, we held a bunch of heifers back January 1. Some of that can be some of those heifers going onto market. The other is cow slaughter. That's the one that kind of drove some of this increase. We've seen an increase in cow slaughter in the last several months.
The numbers were up all across the board. So is there liquidation in that then, yes?
I think we're seeing some liquidation. We saw that extenuation of the winter weather. So we couldn't get our cows out on pasture. We used up more hay stock.
Right.
And we're going to probably continue. We were down 43% over last year of May 1 hay stocks. So I think some of that cow slaughter is a little bit more continuation of liquidation.
Let's start in the cattle market. So we've shaved a few dollars here in the last few weeks. And just put simply, when does this nightmare end? Is there anything on the horizon?
Again, I wish I had, that crystal ball. Box beef cutout, we finally hit that magical $200 per hundredweight that everybody was talking about several weeks ago. If we kind of look into that a little bit, if we go back, looking at live cattle back June 1 contract, futures contract back in December or January, we were at 132, 133. As we moved into March, we hit that 122. Well, that kind of probably a lot of retailers kind of looked at that, saw some potential to get some, Memorial Day or even Mother's Day specials out, probably bought up some more boxed beef. Well, as we come into May, they probably had used a lot of those supplies up from the packers. Therefore, with limited supply, that boxed beef has jumped.
This was maybe the time that we were going to see a record high, right? I mean,
right.
This was the time we were supposed to be ramping up to it, and we're completely the opposite.
Yes, yep. We're seeing that complete difference. We're just not seeing, that increase in the supplies as we had thought.
Quantify the concerns of beef demand for me.
If you talk about, a $7 steak, on sale here for Memorial Day weekend with 70-degree temperatures, it sounds great to go out and grill, right?
Yeah.
If we move forward and we're looking at even higher price beef in July when the temperatures are warm, it doesn't seem as appealing. So as we go forward, I don't know that we'll maintain that boxed beef level at the, 211, I think is what we hit the other day records. I think hopefully we don't go below that $200 level, and hopefully in the fourth quarter we start to see those prices go back up, and then we'll, hopefully dwindle that down through the chain.
Quick analysis of pork here. It's kind of on the other side here. They're not doing so bad.
Right. They've actually seen some increases. They've seen some improvements in their margins, and they actually look like they're ramping up for increased production if we do get, the corn records that we're saying we'll have.
Any help from the export front on either beef or pork?
I think there is potential for that side, but again, we're still dealing with the increasing value of the dollar, so it's making our products more expensive on the other side.
Overall, pork demand, is there any opportunity maybe for them to get a share of the market here if beef does drive up?
It could, it's the retail price for beef continues to rise, so does pork, but not to the extent the beef price has risen, and so we may start to see some switching from some of the beef to the pork. Now, which products we'll see, we'll yet to determine as we move forward.